Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we are discussing over the Banking Regulation Act 1949. Okay, and we have finished till the objectives behind implementing this act. Okay, and the regulatory authority, which is the one and only Reserve Bank of India, right? That's what we had covered so far. Okay, so now let's move forward. This was the index. We have covered the objectives, we have covered the regulatory authority, and we have to cover the licensing and the operations, right? That's what we have to cover. So let's start. So licensing and operation. The Reserve Bank of India is the authority responsible for granting licenses to banks. No entity can carry on banking business in India without obtaining a banking license from the Reserve Bank of India. Okay. Now, students, there is a thing which I would like to tell you. Okay. Actually, I have faced this question from many students who asked me like 1991. 1991. All right. What was happened during this time? We all know that there was a introduction of new economic policy, right? That's what we have discussed many times, and this was also known as liberalization, okay, privatization, all right, and globalization. These were the three main aspects of that particular policy. That's why this is known as LPNG. All right. So basically, when we have to talk about this one, okay. So I have faced many questions from many students who are preparing like you for the competitive exams. They always ask me, why when we revoke the licenses from various businesses, we have removed the licenses from various businesses, then why didn't we remove the license from the banking business? Okay, which means that suppose it is their point of view. Okay, if we removed license from banking operations, okay, then it would encourage more and more people to open banks. Okay. Second point of their side is that when the banking activities rises up due to increasing in banks number, eventually economy will rise up. Okay, that was their point of view, and might be it could be a right fit when we looked upon this thing. Okay, like if we remove the banking license basically, so people will encourage to open the banks, and when the number of banks will grow in the economy, eventually the banking activities will grow, leads to the economy growth. Okay, but when we take a rational approach, okay, then we will find out removing the banking license criteria before opening the bank will be a catastrophe for the economy. Now you will ask me why. Why it would be like a catastrophic disaster if we remove the licensing criteria? Because the license of banking company having many criteria which have been designed in accordance with the need of the time and the need of the economy, as well as the customer and the banks. Okay, all these things are combined and compiled in the license which is to be granted to the banks before they operate their businesses. Okay, that's why we could not remove the banking license. Okay, it is the first way. Second way is that banks have a pivotal role in economy. Okay, so suppose, let's take an example. There are 5 banks. A, B, C, D and E. These all 5 banks having the license issued from the regulatory authority, which is the Reserve Bank of India. Alright, so all of these banks have to work as per the prescribed law and regulations, because if they are not doing these things, the RBI may cancel their license at any point, which will end up their businesses. So they are responsible for their public as well as for the economy of the country in which they are operating. But if there are another 5 banks named as F, G, H, I and J, if these 5 banks operating not according to the license criteria, okay, there are no license criteria for these banks, then these banks will not do work as per the rules and regulations, because they do not have any fear for cease of their operations from the RBI. Why? Because they haven't obtained any license from it. Okay, so do you think that they have any responsibility towards people, towards their depositors, their creditors, the economy? No. That's why I'm telling you it would be a catastrophic disaster if we remove the licensing criteria. Because first thing, we will have no regulation. And second thing, there will be a freestyle banking. Okay, and no one could say anything regarding this. That's why there is a licensing criteria. Okay, so this is the answer I always give to that students who are giving me this point of views out of their curiosity. Okay, because these points might be seem correct. Okay, if you just look at them, you say, okay, why shouldn't we lose the license? We do not making the license compulsory, then the many banks will operate. Okay, the economy will grow. This could be a normal point of view. But because we are preparing for the competitive exams, we are going for the responsible career in that glorious field. So it is become very, very important for us to think rationally. And if we do the rational approach, we come to know that banks having a pivotal role in the economy, there are many criteria in the license to ensure the well-being of the depositor, creditors, economy, as well as for the bank. And if all these things were happened, the banks will be like F, G, H, I, J, who do not have any responsibility towards anyone. All right. So remember this point. Okay. No entity can carry business in India without obtaining a banking license from RBI. Sorry. Okay. So suppose you could say, if this is you, okay, and you want to open a bank. Okay, so it is very, very compulsory to reach the Reserve Bank of India. Okay, show your documents, fulfill all the required needs and other things, then only fulfilling criteria, then only you will be allowed to having a license and to start your own business. All right. Reserve Bank of India is the authority responsible for granting licenses to banks. No entity can carry a business, as we have discussed. Why only the Reserve Bank of India? Because it is the regulatory authority for the banks as per the BRA Act 1949. And as we know, licenses basically issued to regulate the banks. Okay, that's why the regulatory authority is responsible to issue that kind of license. All right. Now, conditions for licensing. What are the conditions on which the license could be issued to the person who is willing to obtain a bank? To be eligible for a banking license, an entity must meet certain criteria, including having a minimum amount of paid up capital as prescribed by the RBI. All right. So basically, we need to talk about the paid up capital, which is the minimum paid up capital. Okay, what do you mean by this? So first of all, this is the question I am asking you. What do you mean by the capital? What is the meaning of capital in terms of financial knowledge? Come on, I have told you many times. What do you mean by the capital? You have 10 seconds to think about it, then I will give you the answer. Your time starts now. It's 1, it's 2, it's 3, it's 4, it's 5, it's 6, it's 7, it's 8, it's 9, it's 10. Okay. So basically, the term capital is basically used as an asset of an individual or an organization. Okay, the asset which they're having is known as their capital. All right, and basically, in terms of banking, the paid up capital stands for minimum money investment put in starting of banking operations. Okay, like what is the minimum amount which has been invested while opening up the bank. All right, so let me give you an example. Suppose there are 5 friends, 1, 2, 3 and 4 and 5. His name is A, his name is B, his name is C, his name is D. Okay, all of these 5 friends met together and then they decided that the banking sector is growing. The bank is nowadays a good business, so we should start it. Okay, then they decided that they will open their bank named XYZ. Okay, so because right now the bank is the business for them. All right, and as we know, each and every business required the initial investment. Okay, the initial investment which is to be made, then the bank or any other business will be started. For example, suppose if they started the XYZ, is it compulsory that the people will reach their banks and deposit their money in the starting? No. Or people will take the loans from them in the starting? No. Okay, so we could say, suppose they had opened their bank in January and till March no one has deposited their money in the bank. Okay, but 2 people approached the bank for taking a loan, and as I have told you, the loan is the asset or as the income source for the bank. Okay, so if they do not have any investment in the XYZ, or you can say initial investment in the XYZ, are they able to give the loan to these 2 people? No, because the loan which has to be granted to the people comes from the deposited amount. Okay, and no one has deposited amount with their bank, so they won't be able to give the loan. Okay. Similarly, suppose from January to March, two people deposited their money with them, okay, and no one has taken out the loan, which means that if no one had taken out the loan from them, so they will not earning any interest, because the interest would be earned on the loans, okay, and no one has taken the loan from them, but the depositors are having the promised interest, okay, which means that doesn't matter whether from January to March has everyone taken a loan from them, but they are required to provide a proper interest to these people. All right. For this kind of things, they required a initial capital, which is known as the paid up capital. All right. So now I think that you have got an idea of the paid up capital. Okay. And the second thing, we could also understand that basically the paid up capital decides sharing of profit amongst the members. All right. Suppose these five friends A, B, C, D, E. Okay. They had opened their bank called XYZ. Okay. Their bank has earned a rupees 1 lakh profit. Now this profit is to be distributed among these people. So on what basis the profit would be distributed? That would be distributed on the basis of investment, or you can say ratio of paid up capital. Okay. So suppose these people have invested rupees 5 lakhs altogether and rupees 1 lakh each. Okay. So now in this scenario, there is a 20% share for each and everyone in that particular profit. Okay. There are 5 people, 20% is the share, which means rupees 20,000 will be earned by each and every person. Okay. So that's how the paid up capital decided. Now, there are two types of banks or two types of paid up capital. First is the scheduled banks. Second one is the unscheduled banks. So what do you mean by these banks? Okay. So basically, the scheduled banks are those banks which are mentioned in second schedule of BRA Act 1949. Okay. And unscheduled banks are those banks which are not mentioned in second schedule of BRA Act 1949. Okay. So there are two types of banks. So if we talk about the scheduled banks, then the minimum paid up capital must be rupees 5 lakhs. Okay. 5 lakhs is the initial capital the bank must have with itself before they apply for the license. Okay. And for unscheduled banks, the most amongst them is the universal bank. असल में you can say actually the universal bank Basically, those banks which having each and every banking services available with them. Not only granting the loans, but they are also making the investment, purchasing government securities, okay, and those other things also. So the universal banks are basically a larger banks, and for these type of banks, the minimum capital must be rupees 500 crores. Okay, so remember these things. For scheduled banks, it is 5 lakh. For unscheduled bank, basically for the universal banks, it must be rupees 500 crores. Okay. Thereafter, remembering another criteria also. This criteria is basically for the universal banks. Okay. So generally, the founders who founded the banks, we call them as the promoters. Okay. In our case, we having 5 promoters: A, B, C, D, and E. Okay. So remember one thing. There are 2 cases. The first case is that for first 5 years after business starting. For first 5 years after starting of the businesses, the promoters must holding at least 40% of shares. Okay, it means that whatever the current valuation of their bank, they must hold 40% of their shares for initial 5 years after starting the business. It is the first condition. The second condition is that from 5 years to 12 years after commencing the business, okay, the promoters holding must be reduced to 15%. Okay, it means that for first 5 years, the promoters must hold at least 40% of the company's or the bank's shares, and thereafter, from 5 years to 12 years after commencement of their businesses, the promoters holding must be reduced to 15%. Okay, this is the fixed criteria. All right. So now I hope you have got a clear-cut idea about the paid up capital. All right. Now let's move forward. The Reserve Bank of India assesses the applicant's financial soundness, management capability, and overall suitability, which means they first verified whether the minimum paid up capital held with the bank. Okay. Second, management capability. Okay. For this, basically, I'm just forgetting the name of that particular bank. It was founded by the women. Okay. So what happened with them? There was a group of women. They reached the RBI. Okay. They arranged the money. Then they reached the RBI and they asked for the approval for taking the license. Okay. The Reserve Bank of India rejected the application. Now you will ask me why the Reserve Bank of India rejected their application. What was the reason given by them? So basically, the Reserve Bank of India having the doubt on the management capability. Okay. So what was the problem with that group of women? Actually, most of their women were rural. And generally illiterate and some of them not even went to school once in a life. Okay, so the founders or the promoters of that particular bank, the RBI found that their management will not be able to sustain the bank for a long because they were illiterate. Okay, but these women did not lose their hopes. They challenged the Reserve Bank of India. They learned the accounts, they learned the finance and economics, and then they proved it. And after the second or third assessment of their founders, the Reserve Bank of India found that all the criteria like financial soundness, management capability, and overall suitabilities are met. So that's why they allowed the license to that particular bank. Okay, and if I'm not wrong, so maybe that bank name was Bharatiya Mahila Bank. Okay, which was BMB. All right, so it's just an example which could prove that management capabilities can reduce the chances to get the approval for the license. All right. Thereafter, the types of bank. It is very, very important scenario. The types of bank. Okay, but before this, there is one thing which I forget to tell you is that we have gone through the approval criteria. Okay, but now my question is the approval criteria is same for all the banks? The answer is no. Okay, because generally, if we divide the banks, then we have two types of banks. Domestic banks. If we're not going as per the other aspects for the division, and if we are dividing the banks on basically incorporation. You know what do you mean by the incorporation? So basically, incorporation is refers to the word registration, like whether the bank has been registered. Okay, so on the basis of this, we have two types of banks, domestic banks, and second one is our foreign banks. Okay, so domestic banks are those banks which have been registered in India, and the foreign banks are those banks which have not been registered in India. Okay, means they are belong to other country. All right, so all the criteria we have learned so far are same for domestic banks. But what about the foreign banks? Are they same for the foreign banks? The answer is yes. There is no discrimination with the foreign banks while granting the license for operational in the Indian territory, except the two additional conditions. The first condition is that their business must be in accordance with the need of Indian economy, okay, to fulfill need of Indian people. It is the first condition. The second condition is that there must be a principle of reciprocal with that particular bank countries, which means in its home country or incorporated country, similar easy provisions for licensing providing to Indian banks. Okay. So the first criteria is that their business must be in accordance with the need of the Indian economy. Like what is the current scenario about the Indian economy, how the Indian economy could be sustained for a long. Okay. So to fulfill the need of the Indian people. Or we could say, suppose if there is a inflation in the Indian market. It's just an example I'm providing you. Okay. And the foreign bank which is applying for the business in the India, and the bank has the policy to grant more and more loans. So now the bank's operation is favor in the Indian economy? No, because already we having a much money supply in the market. We could not afford any type of outsider or the bank to include in the Indian market and you can say spreading the loans facility. All right. Similarly, if there is a condition of deflation, then we required a bank which could provide the loans to the Indian people so that the money supply could be increased. But if the bank which has been entered in the market and now asking for the license do not have any plan to grant the loans to the Indian people, so in that scenarios, the bank will not be helpful for us. Okay. So the first criteria should be met. The second criteria is means there must be a principle of reciprocal. In its home country or the incorporated country, similar easy provisions for licensing provided to Indian banks must be present. Okay. Like as we are treating them, we are allowing them to enter in the Indian market. Similar treatment must be given to the Indian banks for the same. If these kind of things are matching, then the foreign banks are also allowed to operate in India under obtaining the license criteria. Okay. So this is the scenes. Now, the second question is revocation or you can say cancellation of licenses. On what grounds the license could be cancelled by the Reserve Bank of India? So there are basically three main grounds on which the license could be cancelled. The first ground is that if bank ceases to operate in India or involved in any false practice. Okay. Second condition is that if bank fails to comply with any condition or provision of section 22 subsection 2. Okay. And the third is if bank fails to comply with any condition or provision of subsection 3 or 3A of section 22 of BRA Act 1949. Similar act is applicable here also. So these are the three main conditions on which the license would be revoked or cancelled. The first condition is that if the bank is no longer operating in India or closing down its business or shifted to another country, okay, then the license would be cancelled. Second, if bank involved in any false practices, insider trading, you can say the false reporting, embezzlement, in such kind of things, if they are involved, the license would be cancelled. Second point is that if bank fails to comply with the any condition or provision of section 22 subsection 2 of BRA Act 1949. And third condition is if bank fails to comply with any condition or provision of subsection 3 or 3A of section 21 of BRA Act 1949. Okay, so these are the three main conditions on which the license would be revoked. All right. So students, basically in this lecture, we have covered the first figure. It means the conditions for the license. Okay. In the next lecture, we will start with the types of bank licenses. All right. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.